Good morning. Terrific Tuesday to you. Welcome to today's episode of Morning Well. We'll talk about three things. Inflation expectations rise to multi-year highs, Facebook's Instagram-like app for children, and Amazon's 18.5 billion bond issuance. What started off as a strong day for risk appetite turned into losses for currencies as well as equities. The Dow, the Nasdaq hit record highs at the start of New York trade but peaked shortly after, shedding their gains to end the day lower. Technology shares fell as surging commodity prices stoked concerns about whether inflation will derail a growth rebound. The Nasdaq 100 dropped 2.6%, the S&P was down 1%. The Dow relinquished earlier advances late in the day after topping about 35,000 for the first time. Investors were optimistic ahead of last Friday's non-farm payroll report. It disappointed in a major way. Instead of selling, they continued to buy on the hope that weaker jobs meant no tapering. But yesterday, reality set in and they realized that without taper or talk of it, inflation could rise quickly. In fact, that was exactly what we saw in New York Fed's survey of inflation expectations, rising to its highest level since September 2013. This survey basically measures how Americans expect to spend on homes, rent, gas, and higher education. The increase tells us that they expect prices to rise sharply in the coming months. So what did the number look like? Median year ahead inflation expectations in the US increased to about 3.4% in April 2021. That's the highest level since September 2013. Amid mounting concerns over rising price pressures as the economy further reopens. Home and rent price growth expectations increased to 5.5%, a new series high, while households' year-end spending growth outlook remained elevated. Meanwhile, expectations of inflation over the next 3 years was held at 3.1%, the highest since July 2014. So this is what the survey said. The bond market itself, which is the bond market expectations for the pace of consumer price inflation over the coming half a decade, surged on Monday to the highest level since 2006. The 5-year break-even rate, as it's called, climbed as much as 3.4 basis points to 2.73, eclipsing a high from 2008. In the midst of all this inflation news, technology took a big hit. Shares of semiconductor companies were among the biggest decliners. Align Technology, Lam Research, Qualcomm fell more than 6%. In fact, Qualcomm dropped more than 6.5% after Apple insiders said Apple could use its own 5G chips in phones as soon as 2023. Big tech stocks came under pressure. Tesla dropped 6.4%. Facebook was down 4.2%. Facebook shares was down after a New York Times article highlighted brewing controversy between Attorney General for 44 states and the company over its plans to develop an Instagram-like app for children. While the National Association of Attorney General said it's worried about the kids' mental health, Facebook said kids are already widely using social media, but its product would focus on safety and privacy. In other corporate news, Marriott International fell about 4.1% after the hotel chain said it swung to a loss for the first quarter. In the bond market, the yield of the 10-year Treasury ticked up to 1.60 from 1.57 on Friday. On the FX side, the British pound rose about 1% against the dollar. The Scottish National Party fell one seat short of an outright majority in the country's parliament, prompting optimism that Scotland may avoid another vote on splitting away from the UK. Lastly, Amazon's jumbo bond sale. The online retail giant is issuing about 18.5 billion of debt in 8 parts to refinance debt and buy back stock. The longest portion, a 40-year security, may yield around just 95 basis points over treasuries after initially discussing about 115 basis points apparently. And a 2-year bond will be allocated for eligible green and social projects. Turns out cheap borrowing costs are too tempting even for a company with tens of billions of dollars in cash. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.